I know, however, first a disclaimer. Hello and welcome to my channel. Today we're going to discuss ULTY and its funds and how it's Wall Street fertilizer. I mean, seriously. There is no winning with this. I've never seen such bull macaque in my life, and the way they spin it. I mean, are you aware of what's going on? This is out of control. To a single one, almost every YieldMax ETF is losing money. And don't give me this total return drip. I'm a pensioner. I'm looking for income. I'm not looking to reinvest my dividends. If you're young and you're looking at this fund to be around 30 years from now, when you retire, good luck. Good luck to you. I mean, I wish you all the best. However, let's talk about their superstar. It used to be Misty, but now it's ULTY. Diversified. This thing's continuously losing money. Its NAV is eroding. And for all the people that tell you that NAV doesn't mean anything, they're coming out the ass end of a cow, because that's total BS. A fund has to maintain its net asset value. Like, assets under management can be manipulated. Issue more shares, even if you dilute the heck out of everyone, your assets under management will go up. So ULTY went in a very short period of time from 300 million to over 3 billion. And it won't be very long before it's back to 300 million and maybe less. And I'll tell you why. Eventually, everything catches up to you. It doesn't matter, right? What you think and what people tell you, you have to look at what's actually happening. You have to investigate. Seek professional help from a financial advisor, from a tax accountant that can tell you the nuances of everything that's going on with this return of capital now, no return of capital, or very little, a yield now and very little yield later. Let's, as I said, focus on ULTY, the bearer of bad news, right? About a year and a half ago, a little more, a little less, who cares? ULTY came out at $20. Its initial release to the public at $20. It was paying monthly on average until it did the conversion. About 80 cents a month, overall average, give or take, which is 20 cents a week, right? Think about this. 20 cents a week on average until it switched its prospectus to weekly and, options income. So when you have a failing, you and I are, look, let's do an experiment, right? We're going to do an experiment together. You and I, I'm Uncle Ponzi, and you're Uncle Pyramid, right? Well, we know that we're not really wanted on Wall Street, right? But people make money, they don't really care what's flying in the background. And we issue a fund, and the fund comes out at $20. Over the course of about a year, maybe a little bit more, maybe a little bit less, our fund drops to around $10 a share, right? And we're paying out 20 cents distribution, but I'm Uncle Ponzi and you're Uncle Pyramid, and we get together and we brainstorm, right? We say, oh, we're coming out the ass end of a cow. This is not good. What do we do? The cow's already branded. And I say, you know what? Let's rebrand the cow. Heat up that branding iron. We're going to rebrand the cow. And what we're going to say is we're going to go from a monthly pair to a weekly pair. Oh my. And we're going to give a distribution of 80%. Right? By the time we get there, the fund is about gone down from 10 to about 6. Right? So you, Uncle Pyramid, say we can't maintain this 20 cents a week, 80 cents a month. And if we go to divide it by 4 weeks in a month, 20 cents we can't do it. It's okay. I say, Uncle Ponzi says, it's okay. What we're going to do is we're going to cut it in half. The stock's down from $20 to $6, right? It's not going to take very much, right, to give out an 80% distribution. And we'll market it as a combination, return of capital, ROC, return of capital, and yield, right? Dividend, right? So it's a distribution with a cockamamie kind of vary every week to week. No, nobody will ever know what we're doing. All people care about is the money they receive. They don't care about anything else. And you, Uncle Pyramid, says, you know what? This might work. Let's promote it. Let's get some YouTubers involved in it. Right? And they hype it. Super hype. There was super hype. Everybody got excited. As long as they maintain that price point, right? So when it was between $6.20 and $6.40, that fluctuation could be explained away at any given time. The NAV erosion. Oh, NAV erosion doesn't mean nothing. A normal stock has a PE ratio, right? It's kind of like the NAV of an ETF or a mutual fund or something. So let's say, for example, a major corporation, its PE ratio is 20 times. The average over the lifespan of the stock market's about 14 to 15 times PE. But, people will give 20, 30, in some cases in the hundreds or the thousands multiple of PE, and they justify this by saying in the future it will earn this kind of money. And in the case of like AI stocks, that could possibly be. And in the Magnificent Seven, it surely was a contributing factor. But over time, the PEs settle in and settle down, right? But when you're new, balls to the walls. Everything goes, right? Now, ULTY, as an ETF, and most, if not all, of the Yield Max fund are losing money. Their net asset value, which when you own one share of that ETF, the net asset value is what it's worth, right? When people say, oh, NAV erosion doesn't mean, it means everything. Because if the if it was halted, if the yield max funds got halted, they would have to calculate the net asset value to pay back the shareholders, right? So if, let's say, I'm going to give you an example. Let's say the NAV was $5 and the stock is trading at $7. If something happened and all the shareholders had to be paid out, it would be from the NAV. You wouldn't get $7 because there's nobody there to buy it from you. It's a liquidation. You would get $5 a share. So if your NAV goes down, that's your real value. That's a real value, not a made up value, not a pretend value, right? We're not living in Never Never Land, right? Things come at you fast and furious. So when you look at ULTY and you see the NAV eroding, that's the shareholder value, your value eroding. And when it's distributed as a combination of return of capital and yield, every week there's some percentage of return of capital, right? I think this last week was one of the, if not the largest profit weeks for ULTY. I think it made 20 cents. And it's paying out 9.5 cents. Don't think that because it's an ETF, it has to pay out 90% of its profit. No, over the course of the year. ULTY's lost so much money every week that it makes 20 cents. It doesn't take away from how many losses. They are already calculating what's going to be at the end of the year. And you have to understand this. When ULTY was 20 bucks, it was paying over $1 or 25 cents a week. Right? When it dropped down to 15, it was paying less than $1, like 80, 90 cents. And when it dropped down to $10, it was paying 60, 70 cents. So the average was about around 80. Now it's $5 and something, like 560 or 570. And it had a string of 10-cent payouts, but now it's below 10. And as the NAV continues to erode, at what point do your distributions, it'll still be 80%. It'll still be 80%. Right? But at $4, what's it going to be? 6, 7 cents? Right? At $3, 5, 6 cents. At $2, maybe 4, 5 cents. Do you understand? As the NAV erodes, their payouts cannot be maintained because they'll go to 100% return of capital, which you're just getting your money back and you're not making any money. Right? You cannot say that 100% return of capital, it's just words. It's just something. No. They're giving you your money back. That's why it's called return of capital. Because they're returning you your money and telling you they're paying you something. I mean, how stupid do you have to be? Right? If you want the definition in the Webster's dictionary for stupid, go look. There's a picture of you. Now, I'm not a financial advisor. This is purely for entertainment. I'm a pensioner. But this got me hot under the collar. Right? I do own a few hundred shares of ULTY. Only because I have to recoup something, because I was thousands and thousands of shares. I drank the Kool-Aid. I believed every word until I started to see the reality. And then I started investigating and doing my own research. Who's trying to lift the fog from over your eyes? I mean, you're seeing unicorns and rainbows. If you think this fund's going to last. I give ULTY less than 2 years. Maybe 3. Because in the year and something that it's been since it was first issued, it's dropped from $20 to $5, right? What good is it to make 80% if you're losing 75? And what if it drops? And you say, oh, that can't happen. Look at Marnie, right? It's less than $2. It's going to go to a reverse split, right? So people say, well, I can invest in Marnie. And I have 100 shares in Marnie. MRNY. Only because I'm trying to get my commission out of it. Like it cost me commission to get into it. I realized it was no good. And I'm just collecting so that I can collect something, but I'm losing faster than I'm collecting. And that's the situation with all these yield max funds. If you look at the cow, the food comes in, right? Our money. And then the distributions come out, right? And when they come out, the nav erodes. Because it's unsustainable. Do you guys understand what unsustainable is? Now, I'll give you a perfect example. And I'll ask you a question. You answer this question. If yield max funds paid out 30 to 40% a week, like 30 to 40% over the course of a year, but they paid the distribution every week, would you be happy? Sure, I would be happy. As long as the NAV stayed still and slowly went up. Like, the stock market can go flat for a while and then slowly go up, right? And sometimes it dips. You have a situation where the economy goes into the shitter and it recovers. Because overall, from the beginning to now, the stock market goes up and to the right. Okay? But this pure 100% manure. This is like, I'm a pensioner, I'm not a financial advisor, but in my opinion, from what I see, right, this is pure cow dung. You need to really look at what you're doing with your money. I mean, there's so many more things you can invest in. Yeah, okay, it doesn't have the hype. They don't have the star power. They don't have the weekly payouts. But when the music stops playing, are you going to have a chair to sit in? Right? You need to have a chair to sit in to relax in your retirement. When you retire, like I'm disabled, yeah. And I do a lot of sitting and watching and enjoying life. Because when I was young, running around, right, after the latest and greatest thing, I got burnt. But I was young enough. I recovered. Then I got to middle age. And I couldn't run around as much. And I didn't take as many risks. Right? And now I'm in my over 60, right? In retirement. I'm done with speculating. And don't get me wrong. Because I fell for this hook, line, and sinker. Be careful. This is a train wreck waiting to happen. Seek financial advice from a professional. If you like what you heard, right? Please like, share, and subscribe. I'm doing my best as a pensioner to have a decent retirement. I want you to get there. But I don't think this one's going to be there at the end of the day. I give it less than 2 years. But you do what you want. This is purely entertainment.